Hello traders and welcome to another video review. Today is Wednesday, September 24th, 2025. Let's take a look what do we have in the economic calendar for today. Not too many overnight data were published this time, except the Japanese services PMI that was released at the level of 53%. European Bank non-monetary policy meeting will take place today at 9 o'clock. Then we have some bunch of data from the euro, from the eurozone, and especially from the German Boa Balz will give us speech at 9 o'clock. At 10 o'clock we got German business expectations, current assessment, and IFO business climate index data. All of this data scheduled for this at 10 o'clock. Then we jump to the US session. We start with building permits. This data is scheduled for release at 2:30, together with the manufacturing sales from Canada. At 4 o'clock, we got new home sales, and 30 minutes later, crude oil inventories, including Cushing crude oil inventories. So two most important data releases during the US session. And then at 7 o'clock, we got 5-year note auction scheduled for release. And that's about today's calendar. So without any further ado, let's switch to the charts. We start with euro dollar. Euro dollar for our time frame chart reverses from the technical resistance at 1.1818, just below the 50% of the Fibonacci retracement of the last swing to the downside. You can see that we've made local swing high 1.1919, and then we've made the bounce from the 100 period moving average and the lower channel line. Momentum is back to the level of 50. So today it looks like this level of 50 will be tested sooner or later, right? And then if we break below yesterday's low at 1.1806, the down swing might be continued. Obviously, in that situation, the channel lower line might be a little bit more offended and tested. Let me just remove the Fibonacci, so now it's a little bit better. So please pay attention to the current market developments, as the situation with the downside swing is way more probable these days. If we break below yesterday's low, obviously. Nearest target is 1.1725, the low from the September 22nd. So it looks like the market might be ready to continue the downswing after the pause, and let's say 50% Fibonacci retracement. British pound, as usual, is the second, and this time we got the British pound testing the technical resistance 1.3522. At 1.3526 there is a 100 periods moving average, so quite strong intraday technical resistance has been established here, which is why we got this indecision candle, and then the set of the red candles with backing of momentum towards the level of 40. So the bears are still in charge of this market. The key short-term technical resistance is still this one, right? So that's the key level right now for the bulls. They need to break above this level. Nearest target is roughly around 1.3452. This is the low from the September 22nd. Any breakout lower opens the road towards 1.3415, and the swing low located somewhere around 1.3332. Alright, so outlook is negative here on the British pound as well. US dollar versus the Japanese yen. Something might start to cook, as they say, on this pair, because the market were ejected from the supply zone, lower level 148.30, moved lower, pulled back towards the level of 147.5048. This is the area of the 100 periods moving average, and since then the market is trying to jump higher again, and there is a bounce from the level of 50, from the neutral level on the RSI as well. So the situation is quite interesting, and we might see another penetration of this supply zone, which is quite wide. Nevertheless, it's still possible for the bulls to break above this supply zone, and that would mean our situation will change, because right now we have the sideways trend, the clearly defined range, supply and demand, top and the bottom, and this can change very, very quickly in case of any breakout higher or any breakout lower. Obviously this time bulls wants to break higher, so please stay focused, stay vigilant, take a look at this situation here. We might see something interesting cooking here. Let's take a look at crude oil, because we got the crude oil data here scheduled for release for today. We've made another local higher low, right, 61.84. So let me just copy this line and I will mark this level here. There you go, this is the level. Let's say this is the level, and the bounce went towards the level of 100 periods moving average and broke it, right? So we are trading above 63.38. The local high was 63.88 apparently. So that's our current situation. We are back inside of the range, but the dips are being protected here on the crude oil, right? So the bulls, they don't want to see the crude oil to move lower. Nevertheless, the bulls do not initiate any kind of a rally higher. So right now we're just moving up and down, like in a swing. S&P 500 makes another swing high, 6,697, and then jumps lower towards our previous level technical support. Nevertheless, this time it's been used very, very quickly, because it got violated. We are still moving inside of this channel. So we tested the upper channel line, we broke slightly above this upper channel line, and then the market reversed back lower. On a daily time frame chart, it looks like this. This is the newest channel. So we got some sort of the bearish engulfing. Okay, here now what we need to confirm this bearish engulfing into extremely overbought conditions is obviously the next candle. The next daily candle should be, for confirmation, should be red. So we have the confirmation candle and the extension candle. So right now, pretty good beginning, bearish engulfing, and we might see something like this. There you go, bearish engulfing, inside bar, extension to the downside, buying the dip and swing to the upside. So let's see what will happen later on this market, and tomorrow we will know way more, because we have the daily candle closed. That's S&P 500. Let's take a look at the Dow Jones. Dow Jones Industrial Average. Let's switch to the 1 hour time frame. We got this very interesting candle on the Dow Jones. As we can see, this pin bar looks almost like a shooting star, almost like a even doji candle. Let's make this swing high visible, 46,713. This is the swing high and the technical resistance. As you can see, the market is trending. Momentum stays between the level of 55 and 70 as the market keeps moving higher. I'm just wondering whether can I just place this. Well, the trend line might not be quite yes, the trend line might not be quite good for that situation. But if we apply a channel, what do you think? Can we apply the channel? I think we can apply the channel here, and that's the situation eventually with the channel. Do we have any new all-time high, or maybe no? 2024. Yes, we have the new all-time high. There you go. They just did it, 47,000 and something. That's the new all-time high. So if we zoom back on, there is a possibility to break to the upper half of this channel, and as long as we stay in the channel, the outlook remains bullish. Not too many support levels is here, but you can see very clear pattern here. One big day of the upside consolidation, one big day of the upside, second day of the upside, little bit of the upside consolidation, movement to the upside, consolidation, movement to the upside, consolidation, movement to the upside, consolidation. So that's the typical pattern of a market which is of course rallying. And Nasdaq, the Nasdaq American index is moving up as well. Daily time frame chart has just made new swing high, 24,780. We got the bearish engulfing pattern as well. Maybe it's time for a pause, and maybe it's time for movement for a pullback, because market conditions are extremely off about. Nevertheless, this is a clearly trending market. Momentum stays above the level of 50 with occasional corrections lower, but we still trade above the level of 50 on the RSI. So momentum is positive. Bulls are in charge of the market as the Nasdaq keeps moving higher. So if American indices are moving up, what is the Bitcoin doing? Let's switch to the 4-hour time frame chart for more details. Just recently we got this penetration of 61% Fibonacci retracement down towards the level of $111,055. There are some kind of clues telling us that possibly this situation is quite an opportunity for some market for some traders, for some market participants, because those long down shadow are telling us the dips are being bought back up from the extremely oversold conditions. So this is it, to be or not to be for the Bitcoin, because we got this movement to the downside 61%. The key Fibonacci retracement level has been tested. Now it's time for the bulls to move higher. If they move to the upside or not, it's solely up to them. First, technical resistance 113,484. This is the level that needs to be violated in order to test, for example, 100 pins moving average. So we retraced 61% of the Fibonacci series, right? 61% of this swing to the upside. Now it's time to continue this upswing. If there is no continuation of the upswing, we go lower, because the key technical level, which is the Fibonacci retracement, has been tested. That's it. There is no more Fibonacci levels. Important, strong, popular Fibonacci levels. So it's to be or not to be right now for the bulls. Correction is done. Let's move to the upside. If there is no upside movement, no breakout above the technical resistance, above the 100 periods moving average, the market will reverse and move lower. And the target for the bears is 107,386. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.